Mr. Z, are you there?
I am here. Can you hear me?
Hey, coming in perfectly, my friend. Coming in perfectly. How are you today? Happy New Year to you. Happy
Yes.
Chinese New Year.
Happy Year of the Dog.
Yeah, absolutely. What can I help you with, my friend?
Larry, would you please help me with the euro? I was up early watching the euro make a high and then turn down. The euro has declined 120 pips off its high. So it's very clear there was a little trading high there. I didn't catch that.
Neither did I.
You, however,
Yeah.
Can you make the case that the euro is making a more significant top? I speculate it is, but I'd like to hear what you have to think, please.
Yes, John, and I'll tell you, it's we're at the same situation where we were just from a technical standpoint. This is comparing charts. You know, they're totally different charts, but if you compare what the 10-year note was doing about 5 or 6 weeks ago, if you remember when you were watching, in fact, you were the cheerleader of short bonds here at the Tiger Den for quite a while, and that turned out to be pretty good. We're looking at this possible same type of pattern here in the U.S. dollar index. Let's start with that. I think that's the easiest for me to explain, and then I'll move to the euro. But as you see from this U.S. dollar index chart that we have here, we had two really big days, well, actually 3 big days back to back, and we went down and almost tested that low from January 25th. Now, we didn't go through it, which was a total surprise to me because every alert that I had was waking me up about 1 o'clock in the morning because the euro had gone above the 125.30 level. It got 125.25 was the old high. We got up to 125.38. The pound had made a recovery high at the 78% level, and the Japanese yen was literally getting massacred. You know, it actually traded below 105. And then all of a sudden, as you mentioned, in a blink of an eye, markets turned, you know, on a dime. And John, that's where I have learned my lesson many, many times that I do not buy these breakouts. You know, I'll wait till that breakout is, you know, complete and that I can see it. But to buy a breakout above that in euro, I would be very, very remiss. Now, there's a possibility, and I want to bring this to your attention because we're going to put up the euro chart on the weekly here to take a quick look at it, and you'll be able to see it. This is the weekly chart. Now, if you look at that chart really closely, you'll notice that we did take that high out a couple of weeks ago at 125.25. We got up to 125.38, I believe, was the high on foreign exchange. And that's only about 50 pips away, you know, 60 pips away from the 61% on the weekly chart going back to 2014. So I don't know if that's it or John, but you asked me the question, could I make a case for it? This is the case that I could possibly see, that we just missed the 61% retracement. And the fact that we dropped 140 pips so fast, it's just like in the stocks that we just saw, they dropped so fast that say, hey, look at me, something's happened.
Yes, very good. I might also mention, Larry, I've seen you in the past post 10 years worth of the euro on the monthly chart, and there's a very obvious trend line down off of tops that comes in at the same area. Yeah, I'm going to be very alert. I wish I would have shorted the euro 5 hours ago. I did not. So I'm hoping we get in the next day, 2, 3, 4, a nice little bounce to try on a position swing trade short in that. So thanks very much, Larry.
Hey, John, stay with me. One thing we know for sure is there was really no reason up there unless you were up at that time. And my beeper went off, but it only went off about 6 or 7 times at that high, and then it went below it. So by the time I saw it, it was already 70 pips lower, and there was nothing that I could see other than selling weakness, which is not my forte, to do it. So it'll give you a chance. So if this is a top in the euro, the first thing we watch for, of course, is a nice ABCD, counter trend rally, and that's the main thing. John, I wanted to say something else to you that we talked about a little bit yesterday, but the cocoa just keeps screaming. And I wanted to thank you for bringing that to our attention. You know, it was a month ago that you became bullish on that. And now we are testing the 78% level, and that's up three full handles, exactly three full handles from where you were buying it, and that's a serious move. So congratulations on that, and we certainly appreciate everything you do in the den. And folks, if you're listening, you can come in and try the den for a couple of weeks here for free. All you have to do is go to www.tfnn, and there'll be some instructions there. You can get into the Tiger Den and see the traders and the stuff that they're doing during the day. It's all day long. I think it's about 15 or 16 hours, and you'll hear the radio shows and all the other things. But John, I want to thank you again, my friend. You're a class act, and we love having you here.
Larry, thank you so much for your help. By the way, just a parting observation. I, too, was up early like you and trading and observing what the COMEX gold price was doing. And the fact that it went right exactly to that spot gold price high January 25th up there at that 1365, now backed off. That is telling us how important that is. I'll share this with you. If we get over that now, that's going to be just a perfect textbook example of what Tommy O'Brien has taught us many times over the year, and that is a jumping the creek breakout phenomenon. So we'll be watching that real close.
Yeah, I am too. We also got to keep an eye on that silver, because for gold to really get moving, silver's got to, latch onto the stars. So watch that silver. We get that silver above 1705, I think it's got a chance for one heck of a run.
Thanks again, Larry.
Thank you, John, and Happy New Year to you. And we're going to take a little break here, I think, and then I've got something really special for you, the second half of the show. I hope you enjoy it. If you don't listen to it. 877-927-6648.